biggest deal of the year so far has been struck. IDFC Bank and Capital First are to merge, or rather Capital First is to merge into IDFC Bank. And we have the two biggest guys of the moment who have struck the deal, Dr. RAJIV LALL, MD and CEO of IDFC Bank, and VAIDYANATHAN, Executive Chairman of Capital First. Gentlemen, congratulations and thank you very much for joining us. You couldn't keep it from us, could you?
Oh yes, CNBC actually broke it. But I would like to ask that when there are so many big personalities involved in any M&A, there is surely a clash of egos or a little bit of understanding. So how did you reach that? Because there is an IDFC Limited chairman also to deal with, and now of course there are many shareholders that you are going to deal with as well.
So Nisha, this is all about trust. A lot of learnings from previous experiences. I mean, I think unless we learn from our experiences, what are we? So learning from our experiences, I felt that trust was by far the most important thing in stitching a deal, getting a conversation going, and therefore we had no intermediaries involved whatsoever. It was just person to person, getting to know each other, understanding what we were trying to achieve, getting to know each other as people, most importantly, and developing that sense of trust.
Okay. But Dr. Lal, what are the regulatory requirements? Now IDFC's stake in the merged entity will be at 38%, right?
Thereabouts, yeah.
So does the law require that you have to be at 40% till
so yes,
2020?
We don't intend to seek regulatory dispensation. I don't think that it will be a big deal for IDFC to actually claw back to 40%. So that's the intent at this time.
Okay, so it will the combined entity will issue more shares and...
No, it will just buy, IDFC will buy in the market.
Oh, okay, okay. What about Warburg? What do the rules require in terms of Warburg's, I mean, it has to be 5% or below in the new entity. So would they have to sell out?
The current stakeholding is about 36%. Through this deal, they'll come to a little more than 10%, maybe about 10.3 or 10.4%. And to that extent, they probably have to come down to 10%. Now, the norms are at 5%, but I think the system is hopeful based on the synergies we want to demonstrate and the future long-term path we want to show. I think they're hopeful that they will get an approval for 10%.
So there will be regulatory dispensation request?
Not dispensation.
But
it should be dispensation.
But it should be regulatory, you know, they should probably give them a window to deal with that situation.
But then you are also saying that Warburg Pincus wants to stay on as a larger shareholder in the merged entity. They are not looking at monetizing after the merger as well.
That's absolutely true, actually. See, Warburg Pincus, as you know, has had an absolutely dream run with Capital First over the last, say 5 years. They really believe in the business model. They back the management very strong. So the sense that we have from this is that they will continue to back the story for many more years to come. And yeah, they are very much in.
So much depends on RBI allowing them to stay at 10%.
Allowing them to get to 10%. As I said, it's we can't prejudge the regulator. We could respect their view.
But there are precedents.
Yeah. There are precedents. For example, they had a 10% stake in Kotak Mahindra Bank, for example.
Right, exactly right. So if I could just add, the regulation is that subject to RBI discretion, an investor, single investor, can own between 5 and 10%.
Okay.
All right.
So
And
it is their discretion.
Mr. Vaidyanathan, you also will land up owning a very small minority stake in the merged entity by way of your stake in Capital First. So as the CEO, as per the regulations, you'll have to let go of that, and also your CEO position will have to be approved by the RBI.
That is correct. Even my position has to be approved with the regulator. We are hopeful for that. And as far as stakeholding is concerned, you know, say about 3.5 to 3.6% or somewhere in that zone, I don't think that should be any bother at all for anybody. Certainly not. And in fact, it actually demonstrates, I guess, both to the investors that I'm personally also as committed to this institution for the growth in the long run.
So, Mr. Vaidyanathan, a lot is riding on you. In fact, the market is really looking up to you for the retail growth of IDFC Bank. Now, you have really originated a kind of business which will give a lot of cross-selling opportunities and the retail portfolio and assets to the bank. But as far as getting deposits are concerned, Kotak Mahindra Bank, Yes Bank, at at higher rates are also struggling at this point. What is your strategy there, and what is the timeline and the target you're looking at, because markets are very keenly watching out for these targets?
I think it's an absolutely good question, and I think probably one of the very most important questions. In my opinion, when you look all around us at the grassroots level, you see shopkeepers, you see people, you see employees, etc. You just see there is so much opportunity. Everybody needs to keep the savings somewhere. Number two, if you see the Indian economy's growth over the next 10 years, I just read a report, the Morgan Stanley report talks about 6 trillion economy in 2000, and we are 2.3 trillion today. Now, where is the extra 5 trillion going to be financed from? And where are the savings going to come from? They're going to park it somewhere. So if we develop a product where the customers have confidence in us, we have a relevant product, and we open branch structure that can allow customers to come and put the money with us and have a digital strategy, I have no doubt in my mind that we will raise deposits. It's a big play on the Indian
Will it require another inorganic play from your part?
Not necessarily at all. In fact, I'd say this whole merger has to be seen as a bigger picture. The bigger picture is that Indian economy is going to become, say, 7 trillion in, say, 10 years. Okay, 5 trillion to be created. I have a big piece in that. We are not the last bank to be created in the country. Maybe there are 40 banks here. Maybe we're the 41st on the liability side. But 100 more to come. So it's a very big story to play out for.
Last quarter, relative to our balance sheet size, I'm not claiming it's a big number. But from a zero start,
Yes.
last quarter we had 3,200 crores in CASA. Our target for this quarter is close to 4,500 crores. You'll see the numbers whenever they come out in the next few days. Point I'm making is that the market is large. If you keep at it and you have a value proposition that is compelling, there is no reason why you will not build a CASA franchise. It takes time.
See, raising savings and CASA is not only a big boys game. There are so many small private sector banks that are all growing CASA by 40% or 30%. Why should it not be for a new bank? I'm very confident it will happen.
So synergies and retail growth is what market is banking on. But in the medium term, while you achieve that target, Mr. Vaidyanathan, the key question here is the margin depression. And here I would like to come back, apart from SLR, CRR, as well as the PSL requirements, there is also the credit cost, because you have a certain criteria of NPA, which is on the lower side. But when it comes and merges with the bank, will it really depress the margins as well?
I have to answer this question very specifically. I just take you to Capital First. When we started, we were posting 5 crores a quarter of profits. Not long ago, 5 years ago. 5 crores a quarter. At that point of time, if I got stuck saying that it's only 5 crores, I can't invest, I won't be 75 crores a quarter profit today. I got to do what I got to do. So here, to your question, therefore, I'm not really focused or fussed about what the first quarter's profits are going to look like. Am I going to be down? Am I going to be up? That's not the way to think. And we can never build big institutions with that thinking. So your question, I will not focus on the immediate margin this quarter or 1 year. I will start building the organization and build the infrastructure, get the organization, get the products right, and grow the organization, and the results will fall in place when they fall in place.
Okay, just to continue that priority sector, how much of your loans will already qualify for priority sector? Will the merged entity meet?
Oh yes, in fact I think we will add to the priority sector, because we are in excess of 40% is our priority sector. So in fact our priority sector drag to the process is 0. In fact we are a contributor of priority sector to this contribution.
So how much? By how much?
We are excess of about 45% of our book is priority sector.